Now come to this particular question number 43, ID number 43. You and I purchased machinery for some foreign currency, okay, and 3rd November of the preceding year from this particular bank, borrowing from that particular bank, exchange rate is this. Then there was forward exchange rate on 5/10. You have entered into a contract for 45 per USD, okay, and there is some exchange rate, basically the difference, and you will have to adjust that particular cost. Now, first of all, friends, very simple calculation, but it has got a lot of influence from the accounting standards, okay, income disclosure standards. So first of all, 43A provisions, very simple provision. It says that whatever is the exchange currency gain or loss with respect to the asset, you have to adjust it in the block of asset. So no need to go into the technical aspect of this particular provisions. We have very simple one. So cost will get adjusted by the exchange difference. 43AA provision further makes it very clear that subject to this particular provision, any change in foreign exchange rates and all that, okay, you have to follow income computation and the disclosure standards. So this is more of what should I say, the standard based kind of an adjustment, but so I'm not going into the details of all these things, but what we normally expect is whatever is the exchange fluctuation will be adjusted to the block of assets. So that's all that you've got to remember, and otherwise we have to study a lot of standards and kind of situation, which as such not very much warranted right now in a question like this, okay. So what we do is 1 lakh on 3rd November of the preceding year. 3rd November means half the rate, so 1 lakh into 43, so this is going to be the cost, okay, and on that you will consider half the rate, 15% and half the rate. That is going to be a closing after considering depreciation, closing WDV, opening WDV in the next year, okay. Now the rate of exchange on the date of acquisition we have already considered. Now forward exchange rate on 5th October of the previous year you have entered into, and the rate is 45. So in the current previous year to the opening WDV, in the current previous year, okay, I have to add the exchange fluctuation 2 lakhs. That's all, and accordingly I'll have to calculate the depreciation for the current year.